Coming to you live from the palatial studios of PBJ Productions. Welcome to Patrick and BJ Talk Real Estate, where we talk about life, the universe, and everything as it relates to real estate. Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. And today, I think we've talked about this a little bit that you all have seen. But Patrick, today, we're talking about the capital gains or the change that's coming.
Right. Is it a proposed budget that still needs to be passed?
Well, it'll be passed.
Yeah.
Right.
So
because
they got the numbers.
Yeah. So we know it's going to be passed. And in that budget, what we want to talk about is capital gains.
Yeah.
So they're talking about raising capital gains to 66%.
Yes.
So you're going to pay, what that means is if you sell an investment property,
yes,
you're going to pay taxes on 66% of it.
Above and beyond 250,000.
Right.
Is the, the details. Mm-hmm. Right, so we spoke about this a little bit before, but this time we're going to take a little bit of a deeper dive into it, especially with the commentary. It's in the news more. People are asking us questions, what to do with their investment properties, their vacation properties. Will this affect their businesses? So a lot of conversations with our clients are happening right now, just so they can understand, what to do with if they want to sell their properties to beat the deadline or attempt to beat the deadline of June 25th of this year, 2024.
Yeah.
Or do they hold on longer and see what happens with the upcoming election?
Yeah, and I think
federal election is what I'm talking
right.
about. If this changes or doesn't change.
Right. And I think we should preface this to say, number one, if someone's not planning to sell their investment properties or investments or business in the next 5 to 10 years, this doesn't matter. Not relevant to them at all.
I always ask, what's the purpose of that investment?
Yeah.
And most, we're talking about properties. And I remind my clients, why are you telling me, or why did you buy this investment property in the first place? It's for my retirement. I don't have a pension, or I want to pad my pension, that kind of thing. So, before we do a knee-jerk reaction, let's take a step back, reflect on what's going on. What's the purpose? Is this investment performing the way they want it to?
Right.
They might want to get out of that investment for other reasons.
Yeah.
So, but that's individual discussion.
Sure.
And we go from there.
So I think number one, when we talk about how's this going to affect somebody, if they were going to sell in the next 6 months to a year anyway,
yeah,
they might say, okay, well, I'm going to do it right now.
Yeah, I could see that.
Right, because they want to get ahead of that June 25th deadline. 24th, 25th.
This year, June 25th, yes.
25th, yeah. The June 25th deadline, so they want to close before that, right? So I think there's that part of it. To me, the question that I think becomes more relevant is, are we saying that Canada is not open to business for Canadians or investment for Canadians?
As much as I believe there's a lot of value in Canada, there's still a spirit of an entrepreneurship amongst Canadians and opportunity there. The governments make it more and more difficult to do business.
Yeah.
Yeah.
So I think that's one thing I bring up with that is, does that mean that we're going to see people take their investment dollars elsewhere?
Sure. Yeah, it's possible. Yeah. With different regime changes, locally, I've had friends, developers, start assessing immediately when there's a local municipality regime change, and it's just a different policy, different approach, different everything.
Yeah.
And they were already looking at different opportunities.
Right.
Do they go overseas somewhere? Do they go to the Caribbean? Somewhere else, right?
Yeah, and I've heard that too from developers over the years.
I haven't seen anybody pull the trigger.
No.
As in moving.
Right.
It's sort of like when
Well,
when a certain president
here's-
got elected and a whole bunch of celebrities said they were going to like escape
yeah.
to Canada,
Right.
do the Underground Railroad, and none of them did.
Yeah, yeah.
You know,
but I should qualify. I do know one person who they did start a project overseas,
oh, okay.
and they might be done. I should check with them. But they actually, I know a couple of people now that I think about it that they started projects outside of Canada,
Yeah.
based on what was being done in Canada.
Yeah.
So, to me, that's the one thing I would say is what are we saying to the business people, the entrepreneurs, and the investors when it comes to Canada?
Yeah, I think you nailed it right on the head, right? Like everybody's got to sort of evaluate their own situation, if it's the right move or not. But it is making it increasingly more difficult.
Right.
So,
And another part to that, and I was watching a recent news report on BNN Bloomberg, and the person that they were interviewing, she's a broker in Ontario, in Toronto.
Yeah.
She was making the point that there are more rental properties owned by private individuals than by corporations. Now, I haven't looked at that number to see, but let's just say that that's the case.
that's the claim she's making.
Okay.
Yeah. Because the news headlines would rather say the opposite.
Right.
Right? Like, oh, we're being bought out by big corporations and we're competing against big corporations. Well, perhaps, maybe in her market, that's the experience there.
Sure.
Maybe that's not a blanket statement.
Right. But just the reference they were making is if in this market that people are saying, okay, I'm going to divest myself of my investment properties. Her opinion is that they will see less rental properties available.
So
In terms for rent.
shrinking the rental pool.
That was her opinion. I thought that was pretty interesting.
Yeah, I thought, when I first heard that and then I saw the headlines, it was like, oh, rental properties are going to flood the market to like sell before June 25th deadline
Right.
to avoid this tax. I honestly think nothing's going to happen.
Yeah.
It's like, oh, Airbnbs are banned. Okay, so out of 2,600 listings in Victoria, I don't know exactly how many are condos. Let's say there are like 600 condos for sale, 800 condos, whatever. Like 50 of them are micro units. 50 of them are short-term rentals. So what? Right?
Yeah.
Not so what to the people that are selling those properties. I mean, like none of it flooded the market. None of it provided long-term rentals. Oh, which I think I've said it on another video. If you change from short-term rentals to long-term rentals, you're changing the use of it, that it could trigger a GST implication on the value on the present day that you do it.
Right.
So
And
it's like, now you don't want to do that.
Yeah. Because that's a conversation you need to have if that's you
With your accountant.
Accountant,
Lawyer, all that kind of stuff, right? So to make sure if it applies, that kind of idea, so
Yeah.
is it better to sell or you're actually going to eat the 5%
Right. So
and rent it out long term?
yeah. So okay, let's bring it back to what I'm going to tell you what I think. Okay. In terms of the capital gains, I think what it's going to do is it's going to anybody that's on the fence or thinking about getting out, they're going to say, I'm gone. I'm gone
Sure.
sooner than later.
Yeah,
I think
they were
anybody
planning
that's
on it already.
Yeah, anybody that's even close, they're going to be gone.
Yeah.
So I think that's going to happen. I think if you're in, like we said, in the 5 to 10 year range, doesn't matter. You'll evaluate as we go. I think the other part is you're going to evaluate somebody's risk tolerance when it comes to government involvement in your business, in terms of whether you want to get out or not. The other thing I think is it sends the message that Canada's not open for business
Yeah.
to entrepreneurs and businessmen and investors.
I keep thinking when there's policies like this, not to say they're permanent. I think like this too shall pass. In the 90s, we saw a 75% inclusion rate, and then it went back down to 50.
Right.
So, we'll see. We'll see how the wind blows with whatever federal party that we have coming in.
The next election will determine a lot of where this goes, obviously.
Yeah.
But I'm going to go back to, if you're thinking about getting out, you're not going to speculate on the election. You need to make a decision probably sooner than that, right?
Yep, that sounds right.
Yeah. So,
Very good.
yeah. So that's kind of our take on capital gains and what's proposed and what's coming. We'll see, I guess, ultimately. But we do know that by June 25th, it's all going to be in place.
That's the deadline.
That's the deadline. So we'll see what happens there. So thank you for joining us. Please, if you haven't, take a minute, subscribe to our channel. We are putting out regular content every week. And so you want to make sure that you don't miss anything and you stay up to date with what we're talking about. And you know what are your thoughts? I mean, I'd like to hear, what are your thoughts about the capital gains increase and the budget?
Hey, not that we have a lot of time to cover every aspect of this, but maybe there's something that's important that we didn't cover. Mention it in the comments.
Right.
If there's a really important point, and we can revisit this topic
Sure.
in the future and as the deadline gets closer as well.
Yeah.
So, I encourage you to put that in the comments below.
Excellent.
In the meantime, we'll catch you in the next video. Thanks for watching.
See ya.